Nick Maroutsos. He's the co-founder of Kapstream Capital, and he joins us now from Sydney. So, Nick, last week you told us the ECB had its head in the sand. Well, not anymore. What do you think of its action as well as this action by the EU?
I think three words can sum it up very nicely, and that's shock and awe. You know, we knew that there was going to be some sort of bailout package that would come to fruition given the happenings of last week, but certainly not to this extent. So we're very, very pleased at what has transpired. I think what's important to make note of is that there's three primary aspects. Number one being the sheer size of the bailout package. 750 billion euros is quite a large amount, much larger than anticipated, and certainly the 220 billion euros coming from the IMF is much larger than anybody ever thought. Secondly is the coordinated efforts globally was quite a nice surprise. We knew that the ECB would address the liquidity issues and try to enact some stability, but the fact that the Fed was involved and other central banks is certainly a positive. And then lastly is the involvement of the ECB. Like I had mentioned before, they've had their head in the sands, really looked like a lost puppy going through the crisis of last year and throughout this sovereign debt crisis. So to have this sort of about face, kudos to them.
Well, is this 1-2 punch from the EU and the ECB, and then also the coordinated action amongst the world central banks is it going to work? Is it going to prevent Greece from a default and stop the contagion?
I think it'll stop the contagion. What's important that they're doing is they're trying to provide the financial markets with some stability. What it does is it buys them some time so that a lot of these countries, Greece, Portugal, Spain, can enact some form of fiscal reform over the coming weeks and the coming months. It doesn't address their lack of competitiveness. They still have large deficits, no growth, and a high debt burden accruing at a high interest rate when they can't devalue the currency. But it addresses this high debt burden, so it allows them to focus on addressing their fiscal issues in the near term. I don't think that we'll see a Greek default. We might see a haircut on some of their bonds going forward. But again, it provides a floor so that markets can sort of act in a stable manner.
So markets have bounced. There's some confidence back in the markets. Is that going to be sustained, do you think?
I think it'll be sustained for the near term, absolutely. We're going to encounter some speed bumps over the course of the next 6 to 12 months. But I think that risk assets are a go from here. We've seen spreads come in quite aggressively. S&P and futures in the U.S. you'll probably see rally overnight, but certainly we've seen a floor in risk assets.
Nick Maroutsos from Kapstream Capital, thanks again for joining us.